Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong sell-off all the way down into 28.5, where the market actually hit a circuit breaker and it was limit down. Since then, we've seen a pretty strong move back up, but usually when you get this type of failure and breakdown in the overnight session, there is still follow through in the regular trading hours session. So usually these kinds of moves don't just completely reverse immediately and then just continue going up. Usually in the RTH session, you'll see continued selling, that it's not all out of the way. And for that reason, we are going to favor the sell side today. Our short-term bias is going to be neutral to bearish, with the idea that we are going to favor the short side at the resistance zones above. Now, right now, the market is running on very high volume. This is a momentum type market. So you do have to be a bit more careful on taking any kind of zone fades, especially on the long side, because the market can just balance in a fairly wide range. And because there is this increased volatility and increased momentum, it's better to use slightly wider stops as well so that you can kind of sit through some of that short-term volatility. So if usually you're using a 2.5 or 3 point stop, you may want to even raise it a bit from there, depending on the zone that you're trading and how you're timing that trade. But in this kind of volatility, you don't want to use an overly tight stop. That would just be a recipe for disaster because you can get stopped out on a lot of trades that eventually still go on to work. So because of the high volatility, you want to use larger stops, and you're going to have larger targets as well. So your risk reward is not going to be impacted even if you use a 3.5 or 4 point stop. In this kind of market, you can shoot for bigger targets, so it's definitely okay. So on the upside, we have the first area of significant resistance at 19 to 21, followed by 28 quarter to 31 quarter, 34 half, 36 half. Now, ideally, if the market is truly weak, then we don't even take out 19 to 21 and we continue holding below it. And if it's very weak, then we may not even get back above 2108.75 to 975 area here in the short term. On the downside, the first area of decent support is all the way down at 78 quarter to 80 half, 82 quarter, 83 quarter, the 75 half. Those are areas where responsive buyers could jump in, especially if the market is exhausted into it. But ahead of that, there could be some support that develops in real time, but there isn't any major support. And given that we're trading in a high volatility environment, you really only want to be concerned with the more significant areas of support and not really jump in the middle of the range or at minor areas. So on the downside, if we take out the 78 quarter to 80 half, that would serve as a confirmation of the overnight bearish move. And from there, it's really anybody's guess where the market's going to bounce. We have small pockets of support along the way, 69 quarter, 70 quarter, 65.75. The next decent area of resistance is 59 to 62, followed by 49 to 51. We have a big HVN at 46, and then support at 38 to 40, and then of course at the overnight lows at 28 half to 31 half. But if you take out the 75 half and the 78 quarter to 80 half on the downside, then it's a confirmation that sellers are dominant and in control. And at that point, we would have time frame alignment on the bearish side, and we may not really respond to any of these smaller areas of support along the way, and we may have to go all the way down into at least 59.62, and maybe even lower. So that's something we'll have to gauge in real time. The market is running on extremely high volume right now, and that means that there are going to be a lot of patterns that get established in real time. A lot of support resistance levels are going to get established in real time. If you're running on 2 or 3,000% relative volume, just think about just how much volume is taking place. You could be covering several days worth of volume, within a single session this type of day. Now, the volume has been tapering off and coming down, but we are still in a very elevated volume and volatility environment, which means that there can be a lot of pretty decent intraday swings, and some new levels will get developed in real time. So definitely pay attention to key swing highs, key swing lows as they are developing in real time. If you want to play it safe, then focus more on the short side at important resistance, and only consider taking long if the market is exhausted into a pretty decent area of support. And even then, play the momentum, because this is a momentum market right now, and you're going to have to pay close attention to the underlying momentum situation. So keep an eye on the price action, of course, and the NYC tick to see kind of which way momentum is leaning. And that's really going to be very key, just because we're running in higher volatility. If you are a newer trader, you may just want to sit this one out, because it could be high volatility in a range today. We can see big swings up and down, and volatility is a double-edged sword. If you know what you're doing, it can be extremely good, and it can provide you a lot of very quick and large profits. And if you are relatively new and still working on becoming consistently profitable, then this kind of market can really stop you out many times before it provides a good enough winner. So if you're still learning, then it's not a bad idea. Just sit it out. This is a very news-driven type environment where the market's going to be processing the election results, and it'll probably remain volatile for the next couple of days here at least. So, exercise caution, be selective, don't get caught up in the volatility and jump in and out many times. These kinds of markets can sometimes suck you into believing there's much more opportunity and much less risk. Right now we are in an environment where there's elevated risk and elevated opportunity. So there's more risk and more reward, but you just have to be selective enough so that you're not over trading it. Just because there's so much volume that it can kind of trap you into just believing that there's much more on the table, and the fear of missing out can come into play. So if you're mindful of it, if you're aware of it, then it's much easier to get a handle on it. And if you're not aware of it, then it can be a trap. So just be more careful today. Be more selective. Let's see how the market responds to 2108.75 on the upside. Ideally, it holds below 19 and 21. But punching through it would still be technically bearish on the bigger pattern here, and we can still attract sellers at the resistance zones at 28 quarter, 31 quarter, 34 half, 36 half, and pretty much every zone on the way up is a spot for sell side to step in. But if the market is truly weak, then ideally we hold below 19 to 21. So those are the main ideas heading into the open. Let's see if the sell side can maintain the control that we saw earlier in the overnight session, and we'll take it from there.